That's a great question. They are on the BNZ website, I think.
And I know what you're going to say. You're going to say you don't know. I can tell by the way you're answering that.
I don't know look, I think the best way to do it, this is how I do it, is based, which is always a bit embarrassing. You just Google yourself. So you Google. Maybe it's you.
Well, it's not me. I know what comes up when I Google myself. That's not great.
Financial freedom faster. Financial freedom faster.
Winners move, losers wait. The Mortgage HQ Snapshot is where serious players go when they're done waiting and are ready to strike. No fluff, no theory, just the raw insight behind thousands of Kiwi investor wins. The description's below. Go look now. Mike, what does flat actually mean in the context of New Zealand property, and why is it that's such a misunderstood gift for investors right now?
Yeah, that's a good point. I think we tend to talk about national prices, but within flat nationally, you're seeing some pretty divergent trends regionally. Auckland, Wellington still down 20-25% from highs. Canterbury, Otago and Southland now all back up to almost, or in some cases through, where they were in the peaks. So I think flat means ongoing underperformance in Auckland and Wellington, outperformance in some of those southern areas. Because I think that trend has got a little bit further to run, and it reflects in part, as we've talked about, people moving south, right, where the people are headed, and generally speaking, internal migration flows are still net south.
What advice would you give an investor looking to invest in a flat market who perhaps hasn't been through a full property cycle before?
It's probably just the usual one of eyes open. We have seen in the past 5 years just the variability in market conditions that comes in some of these markets. We've had the housing market go from appreciating at rates of 30-40% year on year to falling at 20%, and then doing sort of a whole lot of not much thereafter. So it's a difficult market to predict, as we've seen recently, and the uncertainties, as we've talked about, you can list probably about 5 or 10 uncertainties or known unknowns, but you can probably, there's all the unknown unknowns out there at the moment as well when it comes to the global picture.
Is this kind of flat market the ideal time to refinance or restructure or reposition?
Well, when it comes to mortgage refinancing, I mean, we've seen obviously an increased pace of refis recently because people have shortened up their mortgages, and now we're into that period where we've got we've got an elevated level of refinancing, refixing going on. So it probably is a good time to have another look and kick the tires about a strategy. I think it is just over half of the entire mortgage book will go through a refinance in the coming 6 months. So generally speaking, those will be onto generally lower interest rates. But yeah, that's obviously a good time as well to have a rethink and chat and kick the tires on your strategy.
Have most Kiwi investors already missed the real bottom of the market, or are we in the calm before the storm?
I think in a lot of ways, where we're at now is a little bit, it's a little bit more stable, and maybe, I don't want to say predictable, because
No, you don't.
but stable, certainly. I mean, we've been used to really cyclical markets, particularly through COVID, boom bust. And what we've had for the past couple of years is stability in prices, house prices, first of all. But also, if you look at some of the indicators of market balance that we look at, things like time it takes to sell a house, sales to listing, that they're as close as they kind of tend to get to balanced, i.e. it's not a aggressively buyer's market or sellers. You're not getting FOMO, or you're not getting, what's the other one? FOOP, fear of overpaying. You're sort of somewhere in the middle. So you've got a bit of time if you're a buyer, and there's more choice out there. So it just feels like the market's in a broader state of balance at the moment as you kind of tend to get, and that's actually a long way from the sort of boom bust big cycles we've seen in the past.
So what do the early indicators and data say about a 2026?
Well, look, they probably don't say a whole lot. I mean, we get some indicators that give you a bit of a sense on where we're headed in the next sort of few months and quarters, but for next year, they seem to thin out a bit. It's I think a recovery next year has to be tied to a view of broader economic recovery, because as we've talked about, I mean, you don't tend to see the housing market diverge from the broader economy one way or the other for too long. So that will probably be the string that's tying an expectation of a housing market recovery next year. On will be the broader recovery economy sort of finally starting to pick up some steam and get back to trend growth, or maybe something a little bit ahead of that.
We have talked about confidence before. What effect are falling interest rates having on confidence in the market, particularly in Auckland?
Yeah, I think that they're having an effect. They're definitely having an effect. I think you can see signs that lower interest rates are boosting not just the property market, but other bits of the economy. I think it's harder. Those signs are not obvious because there's been some other offsetting factors, whether it's the hit from global markets turbulence or cost of living or low population growth. That's probably one that can't be overplayed in a New Zealand context. So there's been some support, but it's been kind of taken away by some of these other factors. And I think not just for the property market, but for the economy as a whole, the net of those powerful forces has been not much. So it's sort of clash of the titans fizzling out into not a lot. So if you didn't have lower interest rates, things would be worse. It probably does all add up and support the view, though, that you need to see a little bit more. You need to see some interest rate cuts from here to actually get more stimulus going through the economy and for things to pick up more noticeably.
Is it dangerous for investors and first home buyers to have a wait and see attitude right now, or is that probably the right thing to do with it being so uncertain?
Yeah, I think it makes a lot of sense. I mean, you can certainly see why that sort of attitude might be pervading given the uncertainties that we're in, and which also don't seem to be showing any signs of abating materially anytime soon. Whether it's kind of domestic uncertainty or offshore, it does seem to be that we're in a environment where it's going to remain elevated. It's probably come off a bit from where it was earlier in the year. And so, yeah, it's a perfectly reasoned response. And as I say, look, in a housing market context, there is a bit of stability there as well. So it's not a market that's sort of urging action one way or the other at the moment.
Yes, and you have said to us before that BNZ's looking at house prices going up between 3 and 4% next year, which when you put into inflation, would it be better to keep your money in the bank? Because that really isn't going to give you a capital gain.
Not much relative to inflation if that pans out. So that's about 3% for this year. I think we've got about 5% on the board for next year, which, that's a long time away. But yeah, you bake inflation into it. You're not talking about a whole lot in terms of real house price appreciation, and certainly not getting back to those 2020, 2021 peaks in inflation adjusted house prices, which, is quite a contrast to what you've seen overseas, for example. So in Australia and the US, house prices are already back up through those previous COVID peaks. I mean, we've all kind of been in a similar sort of cycle, peaking in COVID and then the washout thereafter, but those markets have recovered more rapidly. I think it probably reflects in New Zealand the fact that we are a little bit tighter in some of those affordability or valuation type metrics here when it comes to house prices. We've had a long period of time where we've tended to have higher house price inflation compared to offshore, and there's only so far you can keep on pushing that trend. And so we're probably now pushing up hard against some of those affordability constraints compared to what they're doing overseas.
What role is rental yield playing in the current investor mindset?
Yeah, it's in there along with, I guess, all of the usual others. I mean, the cash flow implications at the moment are pretty stretched when it comes to the property market. And one thing we've still got an eye on, as we've talked about before, is, in the rental market, we're looking at, we think our calculation of vacancy rates are, depending on where you are in the country, kind of double or maybe not quite double where they have been over the past 1 or 2 years. So there's a lot of capacity in that market because you've had falling migration, you've had some extra supply come through, and so new rents are declining, and we think that general trend for some inflation pressure coming out of the rental market's still got a ways to run.
What would you say to the average Kiwi couple wanting house prices to crash before they act? Are they going to crash any further?
Oh, look, house prices, as we've talked about before, it's an asset market. It's pretty unpredictable. You never know what's around the corner, but certainly our expectation is that prices going to remain pretty flattish over the rest of this year. We're talking about a 3% odd lift, which you can call relatively flat. But look, what we've seen, of course, when it comes to house price forecasting, there's a lot of variability around those numbers. So, if you're talking about a small lift, then and you put a uncertainty sort of era bands around that, then conceivably prices go sideways or even fall a little bit from here. I mean, that's all within the bounds of usual forecasting uncertainty.
Very good. Mike Jones, Chief Economist at the BNZ. I appreciate your time. You're one of our most popular guests, always knowledgeable. And where can we get your reports if we want to go and see them on your website? Where exactly do we find it on the BNZ website?
That's a great question. They are on the BNZ website, I think.
And I know what you're going to say. You're going to say you don't know. I can tell by the way you're answering that.
I don't know. Look, I think the best way to do it, this is how I do it, is which is always a bit embarrassing. You just Google yourself. So you Google Mike Jones BNZ, and that will lead you to my blog, which is where they're all listed.
What else comes up when you Google Mike Jones BNZ?
I don't know. I don't Google myself that often. I just go to the first hit. We can have a look.
We've got you on here, so guess what? We'll see what comes up.
Maybe it's you. Maybe it's the podcasts.
Well, it's not me. I know what comes up when I Google myself. That's not great.
You might get some American rap, the Mike Jones American rapper, but
what is he singing? To be fair to you, the first page on Google is all good stuff, like good, credible stuff. I think we have to go like second or third page before we start getting stuff that's not so good.
What do you get then?
Well, actually, I'm up to 3 on Google, and it's still BNZ. It's like you have no life.
That's probably good. Long may it continue that way.
Very, very good. Mike Jones, lovely to talk to you. And yes, he's right. Mike Jones BNZ on Google, and you can pick up the reports. Appreciate your time.
Thanks.
Before we go, you don't want motivation. You want ammunition. Moves that work, tactics that win. The 3 property formula is the playbook smart Kiwis are already using while the rest are still refreshing Trade Me and panicking at interest rates. It's written by old mate Andrew Malcolm. No fluff, no webinars, just results from the front line. Get the strategy, own the edge, grab the book before someone else buys your future.